Now, with the Australian market trading at all-time highs at the moment, a question we're getting more and more from clients is, should I be investing now or waiting for a market dip to continue to top up my portfolio? Now, my view is always that consistent investing is a much better strategy, but I actually think there's three key reasons why waiting for a dip is a bit of a dangerous approach. The first one is that markets over the long run trend upwards. So if you are waiting for a dip and the market doesn't do that dip soon, you could be waiting a very long time and the market may never dip below the point that you started waiting at. And that point when you start waiting becomes a bit of an anchor. You start to look at that point and say, well, I'm going to wait for the market to fall 20% from that point. And the problem is, if the market then goes up 10 or 20%, you could be waiting for a 30 or 40% market fall, which may never happen. And that brings me to the second reason why I think it's dangerous, which is if you are waiting for a dip, not only does a dip need to happen, but you need to work out when during the dip are you going to buy. And sometimes the dip may not be as dippy as you'd hoped. It may only dip 10% when you were hoping a 20% dip, or it may only dip 5% when you were hoping for 10. So you have to get your timing perfect for this strategy to work. Most people don't, and unfortunately I've seen too many occasions where people are waiting for a dip, and even if the dip does happen, they end up buying higher a year or two later because they didn't get their timing right. So I certainly believe taking the emotion of waiting for a market dip out of your investing strategy is one of the healthiest things you can do. Being systematic and dollar cost averaging is a strategy that I would recommend to anyone who's worried about buying at all-time highs in the market. If you're dollar cost averaging and drip feeding money into the market over 6 or at most 12 months, it gives you the opportunity to buy if the market does fall, but then you're not feeling that regret if it doesn't end up falling and it keeps on going up because you have invested over that time at least. And that's my response to clients who are waiting for the market dip. My tip would be, don't wait for the dip, be systematic in your approach and dollar cost average to get the best long-term results.